All right, so you know how this works. You send us some really interesting stuff, and we take a deep dive, really trying to understand what's going on.
And today we're looking at the Jollibee Foods Corporation and their 2024 performance, specifically their annual report for that year,
Yeah, and there's a lot to unpack here. You want to know about how their subsidiaries are doing?
and if there were any, setbacks,
Impairments?
exactly, impairments, losses, that sort of thing.
And we also want to understand those big picture metrics like ROE and ROIC, return on equity, and return on invested capital.
And of course, we have to take a look at the core Jollibee brand. How's the flagship doing?
All that, plus any risks that management is highlighting so we can get a sense of what they see on the horizon.
Sounds like a plan. Let's dive in.
Okay, so first, kind of a broad question. How did Jollibee do overall in 2024 globally?
Well, their global revenue grew compared to 2023, so that's a good sign, right? Still expanding their reach.
Definitely. But growing revenue isn't always the whole story.
Right. Their cost of sales also increased. So they're selling more, but it's also costing them more to make those sales.
Makes sense. So revenue's up, but
Mhm.
so are the expenses that go along with it. What's the bottom line impact?
Both their gross profit and operating income went up. And this is true not just globally, but also specifically for their international operations.
So their overseas ventures are actually becoming more profitable.
Seems that way. And that flows down to the bottom line, too. The net income attributable to equity holders of the parent company also increased. So even with higher costs, the owners are seeing a bigger profit.
So overall growth and increasing profitability. Okay, that's the high level view. Now let's get into those subsidiaries. You were specifically curious about the Compose Coffee acquisition in South Korea. That was a big move.
Yeah, in August 2024, they picked up a 70% stake in Compose Coffee, and it wasn't cheap. Something like 340 million US dollars.
Wow. What's so special about Compose Coffee? Why were they willing to spend that much?
Well, they've grown really rapidly in South Korea since 2014. They've got a huge network of mostly franchise stores concentrated in those big metro areas.
Ah, so they can expand quickly with the franchise model. Anything else that makes them stand out?
They've got their own large-scale coffee roasting facility, and it's pretty high-tech, too. That gives them control over their supply chain and probably helps with costs and consistency.
That's smart. So what about their financials? Are they as impressive as their growth?
Their profitability margins are really strong. The report describes them as high double-digit EBITDA and EBIT. So that's earnings before interest, taxes, depreciation, and amortization, and earnings before interest and taxes. Basically, they're making good money on their operations.
So high margins and a franchise model. Sounds like a recipe for success.
And Jollibee thinks so too. They expect this acquisition to seriously boost their revenues, their EBIT, and their total store count. They're even saying it could become their biggest brand globally in terms of outlets.
Wow, their biggest brand. That's a huge statement. So Compose Coffee is definitely one to watch. Okay, moving on to some other subsidiaries. What about JWS Logistics? What do they do?
They're basically the supply chain experts for Jollibee Group. They handle everything from planning and sourcing ingredients to getting those ingredients to JFC stores.
Sounds essential. Are they a big contributor to the bottom line?
Well, the report mentions that they're working on expanding their distribution center capacity, which means they're investing in their infrastructure. But we don't have specific financial performance details for JWS Logistics in this report.
So we can't really assess their profitability from what we have here. What about their operations in China, JFCC, and Hongzhuang Yuan? How are those doing?
JFCC, which also oversees the Young He King brand, is still led by Mr. Louis Liu, and Hongzhuang Yuan had a leadership change in December 2024. Mr. Gray Jiang is now the general manager.
Okay. Any insights into their financials?
Unfortunately, the detailed financial figures for these businesses aren't broken out in this section of the report.
All right, we'll have to look for clues elsewhere. Now, what about their North American brands? We saw mention of Jollibee, Red Ribbon, Chowking, and also Smashburger and the Coffee Bean and Tea Leaf.
Right. Miss Maribeth Dela Cruz is the president of Jollibee Group North America. Smashburger has a new president as of 2025, Mr. Jim Sullivan. And Mr. Jose Ma Miñana Jr. is still the CEO of the Coffee Bean and Tea Leaf.
Okay, lots of names, but again, are we seeing any specific 2024 financials for these brands in the report?
Not in this section, no. But we do have the same store sales growth figures, which can give us some insight.
You're right. The report does mention Tortazo. What's the story there?
Oh yeah, back in July 2023, they put an additional 3.5 million US dollars into Tortazo. That's a Mexican fast casual restaurant business in the US. So now they own 52.22% of it.
Interesting. Another strategic move. Okay, so it seems like we're seeing a pattern here. Lots of information about these subsidiaries, but not a lot of detail on their individual financials for 2024, except for Compose Coffee, of course, which they're really highlighting.
Right. But we do have that same-store sales growth data, or SSSG, for various regions and brands. That gives us a good way to compare performance year over year.
Exactly. So tell me, what does the SSSG tell us about the Philippines? That's their home turf, after all.
It was positive in 2024 compared to 2023. So that's a good sign for their core market.
That's encouraging. What about the rest of the world?
Unfortunately, the People's Republic of China actually saw a decline in SSSG during 2024, so that's something to keep an eye on.
Yeah, a decline in same-store sales could signal some challenges there.
Could be increased competition or maybe changing tastes.
And the good news?
Both North America and EMEA, that's Europe, Middle East, and Africa, both of those regions saw positive SSSG.
All right, so growth in some key areas, but a dip in China. What about the brand-specific SSSG numbers?
The coffee bean and tea leaf did well globally, positive SSSG. But Highlands Coffee, which is mostly in Vietnam, saw a decrease.
Okay, so mixed bag for the coffee brands.
Yeah, but Milksha, their bubble tea brand, actually had positive SSSG.
Interesting. Good for them. And what about Compose Coffee?
It's too early to say. They were acquired so late in 2024 that there's no comparable data yet.
Right, that makes sense. Now, the report also talks about some joint ventures and associates. Anything interesting there financially?
Yeah, we get some summarized financials for a few of them.
Yeah.
Golden Bee, their joint venture in the UAE, actually contributed positively to Jollibee Group's net earnings.
So a good partnership there. Any others worth mentioning?
Well, there's Superfoods Group, which includes Highlands Coffee. They used to have Pho24, but they transferred that business to East West Restaurant Concepts in 2023.
And how did that work out for them?
They actually reported a gain from that transfer. But East West Restaurant Concepts itself, which is also a joint venture, ended up with a net loss.
Ah, so one benefited while the other took a hit. Okay, what about B-Works West Malaysia?
That one's listed as an associate, and they had a cumulative equity in net losses, meaning Jollibee's investment there hasn't really paid off yet.
Okay, so we've talked about a lot of these subsidiaries. Now, the big question, were there any financial losses in 2024 that were big enough to trigger impairments?
That's important to clarify. What we see in this report is that there's no mention of any specific losses within Jollibee's wholly owned subsidiaries that would have required an impairment charge. Now, they do talk about their share of losses from non-wholly owned subsidiaries like those joint ventures and associates we just talked about.
So they're on the hook for a portion of those losses.
Right, and that affects their consolidated financials, but it doesn't necessarily mean that their core assets in their main subsidiaries have been impaired.
Yeah.
So yes, there are some losses coming from those non-wholly owned businesses, but no red flags here about major impairments related to underperforming main subsidiaries in 2024.
That's a really important distinction. So some parts of the business are struggling, but it hasn't led to any write-downs of their key assets, at least not based on this report. Okay, let's switch gears and talk about ROA and ROIC, return on equity and return on invested capital. These are crucial for understanding how well Jollibee is using its money to generate profits.
You're right, but unfortunately, this report doesn't directly give us the calculated ROE and ROIC figures for 2024 or any other year.
So we don't have those specific ratios, but can we still get a sense of whether they're trending up or down based on the other financial information?
We can look at some of the pieces that go into those calculations. For ROE, a big one is the net income attributable to equity holders of the parent company, and we know that increased in 2024.
Right, so that would normally push ROE upwards.
Usually, but remember, ROE is calculated by dividing that net income by total equity. And Jollibee's total equity also went up in 2024 from about 86.3 billion pesos to 94.6 billion pesos. So both the top and bottom of that equation grew.
So it's hard to say for sure what happened to ROE without the actual calculation. It could have gone up, down, or stayed about the same.
Exactly. Same story with ROIC. We know operating income increased, which is good. But total assets, which includes both equity and debt, also grew from around 244.2 billion pesos to 263.6 billion pesos. So again, we need the exact numbers to know the ROIC trend.
Okay, makes sense. So we're seeing improvements in profitability, but because the asset base is also expanding, it's hard to say definitively what's happening with those ratios. But the report does highlight a big jump in consolidated retained earnings, a 15.6% increase. How does that fit into the picture?
That's a really positive sign. Retained earnings are basically the profits the company has kept after paying dividends. That big increase tells us they're generating more profit than they're distributing, which is good for long-term growth in shareholder equity and potentially for future ROE.
So even though we don't have those ROE and ROIC numbers, the overall picture seems to be that profitability is improving.
Okay, let's focus on the core Jollibee franchise now. How is the flagship brand performing? Jollibee is still the heart of the operation, and it's actually one of the biggest fast food brands globally by store count. As of early 2024, they had something like 1,670 Jollibee stores worldwide.
That's a lot of stores. How did that translate to sales in their main market, the Philippines?
The Philippines showed positive SSG for the year, and since most Jollibee stores are there, that's a strong indication that the core brand is doing well.
Good to hear. Any other details on the Philippines' performance?
Yeah, the report says that the positive SSSG was driven by growth in both the number of transactions, meaning more customers, and in the average check size, meaning customers are spending more per visit.
That's a great combination. So more customers are coming in and they're spending more when they do. Sounds like a recipe for success. Okay, last but not least, let's talk about risks. What does management see on the horizon?
Well, right up front, there's the standard forward-looking statement disclaimer, reminding us that any predictions are subject to change.
Of course. But did they highlight any specific risk areas?
Yeah, they specifically talk about impairment of non-financial assets. Now, we know they didn't report any major impairments in 2024, but they're saying that their impairment testing process relies on assumptions, things like long-term growth rates, future earnings, and discount rates.
So if those assumptions change, they might have to reevaluate the value of their assets.
Exactly. And if an asset's value is impaired, that can have a big impact on their financials.
Got it. So that's something to watch. Did they mention any other financial risks?
Absolutely. They have a whole section on financial risk management where they outline the different types of financial risk they face. Things like credit risk, the risk that someone won't pay them back, and liquidity risk, the risk of not having enough cash on hand.
Makes sense. Those are pretty standard risks for a global company.
Yeah, but they also talk about market risk, which includes things like foreign currency risk because their business is international.
Right. So they're exposed to fluctuations in exchange rates.
Exactly. And interest rate risk because interest rates can impact their borrowing costs. And then there's price risk related to any financial assets they might hold.
Wow. Okay. So they're keeping an eye on a lot of different factors.
They have to. A company of their size, operating in so many different markets, needs to be aware of all these risks.
Okay, so let's wrap this up for our listeners. What are the key takeaways from our deep dive into Jollibee's 2024 financial performance?
Jollibee Group had strong overall financial growth in 2024, with increases in global revenue, gross profit, operating income, and net income. Their big move was the acquisition of Compose Coffee, which has a lot of potential. We saw mixed same-store sales growth across their brands and regions, with good performance in the Philippines, but declines in China and Highlands Coffee. Their core Jollibee brand in the Philippines is still doing very well, more customers and higher spending.
And while they didn't report any significant impairments to their main subsidiaries in 2024, management did point out that future impairments are possible depending on how things play out.
Exactly, and they're also actively managing all those financial risks we talked about, like credit risk, liquidity risk, and a market risk. And while the report doesn't give us the exact ROE and RIC numbers, the fact that their net income and operating income improved suggests that those metrics could be trending upwards, though we have to consider the growth in their asset base too.
This has been a really interesting look at Jollibee's 2024 performance. Thanks for breaking it all down.
Glad to do it. Always fascinating to see how a company like Jollibee operates on a global scale.
And for you, our listener, here's something to think about. Jollibee is expanding globally, and their brand portfolio is becoming more diverse. So how will things like integrating Compose Coffee and managing those different regional performances shape their long-term strategy? And what will be the most important factors for them as they try to navigate all those financial and operational risks that management has identified? Lots to ponder there. Until next time.